Hi, I'm Christian Chan, Chief Investment Officer at AssetMark. The people have spoken, and we have a new president. Former President and President-elect Donald Trump won both the popular vote and the Electoral College last night. The red wave continued into Congress as the Republicans also took the Senate. Now, the House is still undecided, but it's leaning Republican at this point. The slim Republican majority in the Senate means they lack the numbers to break a filibuster, providing a bit of balance in Congress. Now, it's still too early to tell exactly how Trump's policies will impact the markets and the economy. Based on his policy position so far, we expect Trump 2.0 to result in incrementally higher economic growth, but also incrementally higher inflation. In combination with potential corporate tax cuts, this would be positive for equities, but potentially negative for bonds. And you could see this reflected in the overnight markets as equities traded up by about 2%, while bonds traded down by about 1%. Now, historically, the presidential election season brings short-term market volatility. This typically eases as policies become clear during the following months. I have three key takeaways. First, after the election noise dies down, we at AssetMark expect markets to quickly refocus on the economic environment, which is pretty good. Secondly, we remind investors that financial markets care much more about economic growth, inflation, and interest rates than who's in the White House. And lastly, growth is tracking above trend, inflation is falling, and the consumer remains strong. Reflecting on the election itself, this was a highly divisive campaign on both sides. But I can't help but to marvel at our election process and the peaceful transfer of power. It is a hallmark of American democracy and one of America's greatest competitive advantages. Thank you for watching this 2-minute CIO update. We'll talk to you next month.